Good day, guys. Welcome to my YouTube channel. It's the Black Mask. You already know the vibes. So, guys, on today's video, I don't think I'm gonna have a chance to analyze the chart, but I wanna show you something that I've been working on, which is backtesting. I was backtesting this strategy yesterday. I backtested Germany 30 and US 30. And today, I was able to backtest NAS100. So I'm left only to backtest gold. So I wanna go through the I took some pictures, so I wanna go through the pictures that I took while I was backtesting these indices, right? So with my thing over here, so I wanna show you my backtesting, how I backtest, how I confirm, how I avoid taking trades, how I get out of the trades with the backtesting that I was doing yesterday and today. So guys, without wasting your time, but I think if I have enough time, I will try to analyze maybe one index. But if time is not on our side, I'm gonna keep it short and only remain on the backtesting and showing you the results of me backtesting, right? So guys, without wasting further of your time, let's jump in straight to the screen. So as you can see, let me go into my files, guys. I want to show you something. Like, okay, now I have this file. It's Forex, and under Forex I have Germany 30, NAS100, US 30, and gold. If I can enter on NAS100, you can see these pictures are the pictures that I took in terms of me showing how the setups are most likely to play out, you know, what to expect when something happens and all that. So guys, let me not waste further of your time and jump in to explaining what is it that is happening. So as you can see here, I said a bad setup. The price had an impulse to the downside. You can see we had a downward momentum, and then price had a correction after an impulse. You can see the price was correcting there, and then price broke the correction, giving selling opportunity. And remember, like I always say, after an impulse, we should expect a correction. And once the price breaks that correction, that's when you can enter with your signal or with your opportunity. It will depend whether the momentum is bullish or bearish. That's one thing I want to clarify to make it more simple. I want to explain it further for you to understand. You need to know what's the current movement of the price. What is it that the price is been doing lately? Are we currently bullish or are we bearish? That will help you to focus only on one setup, which is on a bullish trend or on a bullish momentum. You focus on buying opportunities, and if you're on a bearish momentum, you're gonna focus more on selling opportunities until it gets to a point where you're experienced enough to predict or to tell those selling opportunities inside a bullish momentum, or to sell those buying opportunities inside of a bearish momentum. So in this case, where we are not there yet. I'm just gonna follow this trading strategy that I'm using. An impulse and a correction, at a breakout of a correction, that's when you enter with your opportunity. As you can see here, like I said, that the price had an impulse to the upside, to the downside, which means it explains that at this point I was focusing more on selling opportunities because of the momentum was bearish. So now the price broke the correction, giving selling opportunity. That's right. The breakout candle was aggressive, forcing a large stop loss. That's what does this. That's the thing of breakout candlestick being aggressive. It is that factor that makes this setup a bad setup. That is why I said this setup is a bad setup, because of the drawback will kill you. So avoid to take a trade, because of once you place your selling opportunity there and you put your stop loss just above there, you have a large gap before your stop loss is hit, and your drawback, in case of maybe you don't have enough capital to trade, it's gonna take you out and it's gonna blow your account. Remember, this is NAS100. It's an index. It's very volatile. So avoid taking trades whether there is an aggressive breakout candlestick, because the stop loss will have more space and the drawback will kill you. So avoid taking trades like this. In this case, you can see they had just a little drawback and then it pushed it to the downside. It's fine. The market will reward you. Just be patient and wait for another setup that ticks all the boxes. So in terms of my trading style, this doesn't tick my box. That breakout candlestick that is aggressive, it tells me not to trade, not to take a trade. It's a bad setup. Let's move to another picture. You can see right here also a bad setup. Like I said, the price had an impulse to a downside. You can see here price impulse to a downside. Price had a correction after an impulse. You can see price corrected to the upside maybe. and then price broke the correction, giving selling opportunity. We can see here the price broke the correction that we had there. The breakout candlestick was aggressive, forcing a large stop loss. Like I said from the previous photo or picture, an aggressive breakout candlestick will leave us with a higher with a large stop loss gap, and it's gonna take you out if you have a small account. The drawback will kill you, so avoid to take a trade. I understand. Even here, you see, you could have entered with a sell and you have made money because of it followed. But I know in most cases, in terms of drawbacks, in this case, it's gonna kill you. Even I don't think if you have a small account, a drawback, it will not even have to get your stop loss to take you out. You see, that's what I'm avoiding in these setups. So it's a bad setup according to my way or my style of trading. Let's move to the other picture. A good setup. Why? Because of the price had an impulse to the downside. The price had a correction. You can see here, price was coming down, had an impulse to the downside, and now price corrected, created a correction there. Price broke the correction, giving selling opportunity. You can see now the price broke, but the breakout candlestick was not aggressive. The setup has a good risk to reward ratio, and the take profit at the next zone, allowing a good risk to reward ratio. Okay, what I mean is now we had a breakout candlestick. You can see here after correction, this giving us a signal to go short, and now put a stop loss there, fine. And now our take profit should be at a point where, or to the next zone where it will give us a good risk to reward ratio. I'm saying when you are trading, you should have a good risk to reward ratio of at least 1:2. Right? Simple. And we can see again we had a impulse correction. You had a breakout candlestick, entered with a sell. Our take profit at the next zone or area of interest, and it will give us a good risk to reward ratio. That's it. You kill it. Impulse correction, breakout candlestick of a correction, sell signal, take profit at the next zone. You kill it. You are out. You get out of the market. That's it. A good setup again. The price had an impulse to the downside. You can see the price pulled to the downside and had a correction here. Price had a correction after an impulse. You can see we had an impulse, now correction. The price broke the correction, giving selling opportunity. You can see that we had a breakout candlestick there, and then the setup had a good risk to reward ratio. The take profit at the next zone, allowing a good risk to reward ratio. You can see that the price broke that correction, and our take profit was at the next zone. This is why you have to put your take profit at the next zone, because of, look at this. This is where price is most likely to reverse. Remember when from the previous video, when I'm drawing the zones, I always explain that zone is an area of interest where price is most likely to reverse, reject, or change direction, or consolidate, or have a problem crossing over that zone. So as you can see here, this was a zone that we drew from a weekly time frame, and now our take profit was at it. And then once we hit that the zone, take profit hit, the price went to the upside. The price literally went to the upside. So it's very important as to when knowing when to get out of a trade or a setup. It's very important, as you should know, as much as you know when to enter the market or enter the setup. It's very important to know when to get out of a setup. So me, that's how I determine where I'm getting out, where I'm closing off my trades.